Welcome to the Daily Insights That Matter. India's annual wholesale price inflation eased to 4.95%, which is a 22-month low in the month of December. Now, this fall was mainly attributed to the fall in prices in food articles and crude as well. Now, before we get into the numbers, it's important to understand the distinction between WPI and CPI. WPI calculates the average change in wholesale prices of goods, whereas CPI calculates the average change in retail prices of goods and services. WPI only considers changes in the price of goods, whereas CPI considers changing in price of goods and services as well. Now, WPI gives more weightage to the manufactured goods, whereas CPI gives more weightage to the food items. Now, the inflation rate was recorded at 4.95% from 5.85% in the month of November. This was the first time that the rate had slipped below the 5% mark since February 2021. The fall was mainly attributed to the fall in food articles and crude petroleum as well. Now, other factors were the decrease in prices of mineral oils, natural gas, food products, textiles, chemical products as well. Now, the inflation numbers were recorded low on the backdrop of easing supply-side pressures and also a favorable base effect. Recently, the retail inflation numbers also came in and eased at a year low of 5.7%. Now, this was under the RBI's upper tolerance limit of 6% for the second consecutive month. India's merchandise exports fell by 12.2% year over year to $34.5 billion, while imports fell by 3.5% year over year to $58.2 billion, clearly reflecting the impact of an anticipated recession in the West on India's foreign trade. Now, as a result, India's trade deficit widened to $23.76 billion in December from $21.1 billion in December 2021. However, on a sequential month-on-month basis, the trade deficit remained fairly flat at $23.89 billion as seen in November 2022. Now, exports have been impacted due to a slowdown in demand from key markets following aggressive rate hikes by leading central banks and an unfavorable base. The imports declined as well on the back of a recent slowdown in domestic goods consumption. Having said that, the easing global commodity prices have impacted both the exports and the imports in value terms. Now, during the first 3 quarters of this fiscal, that is from April to December this fiscal, the country's overall exports rose by 9% to $332.8 billion from $305.4 billion as seen in the same period in the previous fiscal. Now, imports during the period increased by over 25% to $551.7 billion from $441.5 billion. Now, in the short term, India's exports and imports are expected to remain under pressure going forward on the back of the likely global slowdown. Now, India does not rely heavily on exports, however, bolstering the export industry is essential for maintaining growth, particularly given the market confidence surrounding India's manufacturing growth story. So, what does all of this news mean for you? Now, we continue to keep our reservations on the inflation outlook as there are several factors driving it. Having said that, the moderation in both the wholesale and the retail inflation will provide comfort in policy setting framework to the RBI in the coming months. This will therefore have an indirect positive impact on you. India's merchandise trade prospects are now uncertain due to the global macroeconomic climate. We believe India's trade activities would take shape with the export rising as global obstacles subside and the policy actions take place going forward. Now, this will therefore have an indirect neutral impact on you. While I say this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.